I had a full-time job last year and I have a side business. I didn't know I was supposed to be making quarterly tax payments. And I am now getting hit with a penalty. How do you know when you're supposed to make the payments, and what do I do now that I owe this penalty?
You know, this is so funny because one of the things we do in the wealth management firm at Abound Wealth is we love to review all of our clients' tax returns, right? We want you to send us a copy of your tax return before you file so that we can look over it, make sure everything was filled out correctly, make sure there are no mistakes. And what's so funny is it is always interesting because this happens sometimes. A client, for the very first time ever, you know, it'll show, you know, amount that you owe or amount refunded. And then like 2 or 3 lines below that, it will show penalty. And immediately they'll be like, oh, what's this? Whoa, what happened? And I think a lot of people, especially in this economic environment we found ourselves in over the last 10 years, have begun to see this because now we sort of live in this gig economy where it's not just your day job. It's not just your W-2 wages where your earned income is coming from, but a lot of people have side income. A lot of people get paid as independent contractors. A lot of people do gigs. And when that gig income reaches a certain level, it begins to impact your tax return in such a way where the IRS says, whoa, wait a second there, fella. Wait a second, lady. You did not pay us what you owed us when you owed us. And we have a problem with that.
Well, this is the part when you're an employee, a W-2 employee, you start realizing, man, it's kind of nice that when I get my paycheck, that there's already withholding for taxes. My employer is forced to pay for half of my Social Security and Medicare. So that's all covered. It just kind of automatically happens. But then when you do a side hustle, you realize you're treated as an independent contractor. Right. So it all falls on your shoulders. So let's come back to the question that Joe had. Let's first lay out some ground rules. How do you know if you're in trouble or how to stay out of trouble? The IRS is constantly running. There's a calculation going on in the background. And here's what you need to know. You need to either pay 90% of current year's taxes as you make the money, by the way. This is not something where you just wait until December 31st and send them 90%. You have to do this as you earn the income, or you have to pay 100% of prior year's taxes unless you make $150,000. If you make over $150,000, then you need to pay 110% of last year's taxes.
And that's in order to avoid any sort of penalty from underpayment for the year. So long as you do that.
That's the safe harbor provision for the IRS. Now, look, I've been there. I've done a lot of tax preparation. I did 16 years of tax prep. And it was not uncommon that people would get in this trap that they'd realize, oh my goodness, I didn't make estimated tax payments. I made more income than I was anticipating. What do you do? How do you protect yourself? Or is there any way that you can work some, magic to get yourself out of it? Let me tell you a little known thing that a lot of people don't realize is that if you do get caught in the quicksand of an underpayment penalty, first think about the fact, did you earn this money all at once? Specifically, maybe you got a big bonus in the fourth quarter, or you did all because you're trying to pay for Christmas gifts or holiday gifts. So you went and did a lot of gig work in the fourth quarter specifically. If you can annualize your income based upon when you earned it, there's a chance you can minimize those underpayment penalties. So I want you to, if you get in trouble with an underpayment penalty, go look up annualized installment method, and you'll fill out the form 2210, and you'll be able to figure out how you can minimize those taxes as much as possible. Because I was able to help a lot of business owners as well as self-employed people who I would say, look, let's go look at when you earn the income versus when you were supposed to make the payment and see if there's a way we could annualize this out to kind of lower that penalty down as much as possible.
Now, this is maybe a hot take. In my opinion, I think paying estimated taxes is kind of annoying. I don't love the process of it. One, because the dates don't line up. You got to pay them on April 15th, and then you got to pay them on June 15th, and then you got to pay them on September 15th, then you got to pay them on January 15th. It doesn't follow the normal calendar stuff. And so if you've ever done our tax return and you've ended up owing, one of the things that either your tax preparer, the tax software will use, will automatically do anytime you owe is it will immediately make a recommendation that you ought to start paying estimated quarterly payments, and it'll give you a voucher amount to begin paying. So if you're someone who owed money last year and you see it and you're like, oh my gosh, now I got to start making estimates, that may not be the case. Because remember, if you are someone like Joe and you have day job where you do have W-2 wages and you do have this side gig, it might be possible for you to just adjust your withholding on the day job. And if you can adjust it enough to withhold, you may not have to make those estimated payments. So it's one of those things, if you're just slightly owing at the end of every year and you make enough in your day job, you may not have to go through the rigmarole of doing estimates. You could just adjust your W-4, withhold more taxes from your normal paycheck, and you may avoid having to run into the situation in the future.
Or if it's just a one-off thing, maybe you just had some money come your way, and now the tax prep software or your CPA is saying you need to make estimated tax payments. Make sure you go the extra step. Tell your tax preparer or input in on the software that no, next year's income is going to be back to where it used to be. So, because what I don't want you to do, I know money's tight in a lot of aspects. I don't want you making estimated tax payments and giving that money interest free to the government for a full year before you get it back. So that's why you got to be an active participant in your personal taxes, in your financial life. And this is, once again, another one of those reasons when we tell people this is a complexity of success. And if you find yourself, you're like, man, now I'm starting to have more and more struggles with not only my taxes, but also my investments. This is why we take the relationship to the next level.